In this video, I'll explain 6 huge tax changes we're about to see this year. If you're new here, I'm a qualified accountant and experienced tax advisor. Did you know that the average UK household in a lifetime will spend over £1.2 million in tax? So it's really important that you understand the tax system so that you can make informed choices about how to lower your tax burden. The first change we're about to see is to vehicle excise duty. Vehicle excise duty is a tax that's payable by every car that uses public roads in the UK, but currently electric vehicles don't have to pay this tax. But from the 1st of April, we'll see a big change because for the first time, electric vehicles will need to pay the tax. It means that for vehicles registered after the 1st of April 2017, the standard rate of £190 will be payable each year. It will also apply to petrol and diesel vehicles as well, but the biggest impact we'll see is on the purchase of brand new cars with high CO2 emissions. So if you're in the market for a brand new BMW X5M next year, your first year vehicle excise duty charge would double from £1,650 to £3,300. The UK government are hoping to raise an additional £2 billion from these vehicle excise duty changes by the 27-28 tax year. The second change is to capital gains tax. Capital gains tax is payable when you sell a chargeable asset that's worth over £6,000. And it's chargeable on everything from crypto assets to a second property to any other personal possessions that you might have. You do have an annual exemption every year of £3,000, which means that you can make a gain of that much in a year before you have to start paying capital gains tax. At the end of 2024, the capital gains tax rates were increased. So for basic rate taxpayers, it went up from 10% to 18%, and for higher and additional rate taxpayers, it increased from 20% to 24%. So that does mean that if you're selling something in 2025 that's subject to capital gains tax, like cryptocurrency, you will be paying a lot more capital gains tax than if you had sold it in 2024. There's another change happening specifically from the 6th of April 2025, and that's to business asset disposal relief. This relief is available to certain qualifying business disposals if you are disposing of your own personal business. And it did mean that you would only have to pay a capital gains tax rate of 10% on any profits that you made from the sale of your business. But this is a very expensive tax relief for the government, and it actually costs the Exchequer £1.5 billion a year. So the government are increasing the tax rate. So if you sell your business from April 2025, you will actually pay a tax rate of 14% on the gain. And then in 2026, the tax rate is increasing again to 18%. Change number 3 is to furnished holiday lettings. In April of this year, the government will be removing lots of the beneficial tax advantages that short-term lettings currently receive. So this will apply to Airbnbs. In April of this year, the government will be removing lots of the tax advantages that short-term rentals currently receive. There are a couple of things that could affect you. So first of all, if you are a higher or additional rate taxpayer, you'll find that you'll be paying a lot more tax from April. One of the reasons is that at the moment, you can deduct your full mortgage interest from your rental income, but that will be restricted from April to a 20% tax credit. That means it has no impact on basic rate taxpayers who pay a tax rate of 20% anyway, but it will have an impact on higher and additional rate taxpayers who pay tax at 40% and 45%. And I'll just show you an example to explain how that works. So say that you're a higher rate taxpayer and you earn rental income of 24k from your Airbnb. Your mortgage interest for the year is 5k. So you have a taxable income of 19k. That's a tax bill of £7,600 at 40%. Now let's say the changes have come into effect. So you earn your 24k from your Airbnb, but you can no longer deduct that £5,000 mortgage interest in full. So you have to pay tax at 40% on that £24,000. So your tax liability is £9,600. You'll then receive your 20% tax credit on your mortgage interest. So on £5,000, that's a £1,000 tax credit. So your effective tax liability is now £8,600, and that's £1,000 more than before this change was implemented. Another big change we'll see is to the capital gains tax rates that are applied to furnished holiday lettings businesses. So let's say that you operate an Airbnb business. Currently, if you sold that business and you qualified for business asset disposal relief, you could pay just 10% capital gains tax on the profit of the sale of your business. But from April, the government are changing that. So if you do sell your Airbnb business, those business asset disposal relief rates won't be available. Instead, you'll have to pay the usual residential capital gains tax rates. So if you're a higher or additional rate taxpayer, that would be 24%. So let's say that you made a 100k gain. At the moment, you could qualify for business asset disposal relief and pay just 10k in tax. But from April, that will change to 24k. So that's a huge difference. Stamp duty. From April of this year, you'll have to start paying stamp duty from a lower value than you currently do when you're buying a new home. So at the moment, if you're a first-time buyer, you don't need to pay any stamp duty up to a value of £425,000, and that's known as the nil rate band, as long as the total cost of your house doesn't exceed £625,000. And then for anybody else who's not a first-time buyer and who's just selling their main home and then buying a new one, the nil rate band is £250,000. The nil rate band is reducing for both sets of people. So for first-time buyers, it's reducing to £300,000, and then for everybody else, it's reducing to £125,000, which means that stamp duty land tax will be payable on a lower value. So you'll be paying stamp duty on a bigger amount of the purchase price. So it means that if you are buying a house after April 2025 and it's not your first home, so you're just replacing your main home, you'll end up paying an extra £2,500 in stamp duty land tax. The next major change is to VAT on private school fees. The government are amending the VAT Act to remove the current VAT exemption for private schools. That means that from the 1st of January 2025, private schools will start charging VAT on their fees. It's not a blanket 20% charge on absolutely everything that private schools charge for, but it will apply to the cost of education and the cost of boarding. The draft legislation does say that other things closely associated with education are exempt, and that could include the cost of school meals and any exam fees. But it does mean that the bulk of the fees will have VAT applied to them because it's the education and the boarding costs that are the most expensive. And at the moment, it's expected that nursery classes will be exempt from the VAT. The next change is to non-domiciled status. From April this year, the concept of domicile will no longer be relevant for UK tax purposes. Domicile is where you consider your permanent home to be. So you could live in the UK and say that your domicile is in Dubai. And what that would allow you to do is to benefit from the non-domicile tax regime, which means that you don't have to pay UK tax on your worldwide income and gains. You might remember Akshata Murthy famously claimed non-domicile status. So she was able to receive millions of pounds of dividends from her Infosys shares because Infosys is an Indian company, and because she was non-domiciled, she was domiciled in India, she was able to not pay any UK tax on those dividends as long as she didn't remit those dividends back to the UK. And you could do that for a small fee, a remittance basis charge that you would pay every year. So the super wealthy would make the most of this. They would earn worldwide income and not remit it back to the UK and then not have to pay UK tax on it. That will no longer be possible from April, because if you're a UK resident, you will have to pay UK tax on your worldwide income and gains regardless of where you consider your permanent home to be, because domicile will no longer be relevant. There will, however, be a 4-year foreign income and gains regime, which means that if you've lived outside of the UK for the last 10 years and then you come to the UK for 4 years, you won't have to pay any UK tax on your foreign income and gains, even if you do bring them into the UK. But that will only last for 4 years, and then after that you will be subject to UK tax on that worldwide income. So hopefully now you'll be aware of some of the bigger tax changes that we're about to see this year. Don't forget to subscribe to the channel if you haven't already, because it really will help it to grow, and I will see you next time.